Morning everyone, Simon here from Ninjodo. We're sitting here today with Adele Martin from Firefly Wealth, who's going to take us through the 10 deadly sins of small business cash flow management. Now, Adele has been in the industry for over 14 years. She's graduated from Newcastle and Deakin University. She's also internationally recognized as a certified financial planner, so she knows her stuff. But what makes her different from other financial planners? Adele, maybe you could fill us in on that one.
Yeah, I guess for me is that I believe true wealth happens slowly and over time, and largely I believe that can be attributed to good cash flow management. Having been in the industry for 14 years now, I've seen people with great strategies, whether that be their own business or whether it be an investment property or shares. But at the end of the day, you've got more going out than coming in, you're going to be going backwards. So I probably spend about 60 to 70% of my time with clients, helping them with cash flow management. And the rest of the time is with the strategy and the products. But a large majority where I add the most value is helping people manage their cash flow.
All right, well, with that, I think it's a perfect segue to get into the 10 deadly sins of small business cash flow management. So, sin number one, slow collection. Now, elaborate on that and then we'll get into it.
Yeah, so slow collection, you always want to make sure you've got money coming in faster than what it's going out. So you're always trying to speed up ways you can get money in as quickly as possible, because that's what really kills a lot of small businesses and their profitability.
And where do you think small business owners get stuck in this point the most?
I guess they get stuck because they've done what they've always done. And so one of the things that you can look up to speed up collection is things like seeing you can change your terms of trade. Can you go from 90 days to 30 days as an example? The other thing to speed up collection is you might look at prepayments or deposits when people order something. You'd also enable credit card payments to make it easier for people to be able to pay. And the other thing which I've seen many small business owners do, particularly in the trades, is just not invoice. It's been something they've been meaning to get around to do, and they just don't allow time for invoicing. They're so busy working and doing the actual job that they don't allow time for invoicing. And so those are just a couple of things that you can do to try and speed up collection, to try and get money into your bank account quicker.
All right, and so with those 2 points, accepting credit cards and speeding up the actual process of invoicing people on a regular basis, what are some things or tools or even techniques that people can do to help get those two things underway? There's been a lot of technology advancement as far as being able to accept credit cards even from your mobile phone or a portable PayPal tool, but what do you suggest with your clients?
So I think firstly having a really good business banker is essential, because they're going to keep you up to date with all the tools that are available, such as you just mentioned, paying on your phone and things like that. But also that having a great relationship with the accountant. So things like Xero, which is a cloud-based accounting software, really simple to be able to, you can invoice straight from that. It reconciles the payments for you. So those two things from a technology perspective are great. The other thing is just allowing time for it, is setting aside time and treating it like a client appointment. So that time for invoicing, make it as important and have it scheduled just like you would if you were seeing a client.
Okay, so perhaps first thing on a Friday morning or after lunch with a few beers winding down for the week,
Yeah.
just sit down and do your actual invoicing. Probably not too many beers if you're going to be doing
Yeah, yeah.
invoicing though, but get them out on a weekly basis so that at least you know the request is out there, the money's going to come in, and then it's just a case of checking it more frequently again that it is actually getting processed, and maybe some people need some follow-up calls.
Correct.
Fantastic. All right, anything else on slow collection that we can give people?
No, I think that's pretty good. I think that's pretty much covered it.
Excellent. All right. Sin number two, no policy or procedures for bad debtors. So we just touched on this about having to follow people up. Go into this one a little bit more. Where do people come unstuck?
So I think so bad debtors are when people actually owe you money. So you've sent out your invoice and people haven't paid you by the due date.
Yep.
So I think that's the very first thing is on your invoice is make sure you do have a due date, because often people miss that. The second thing is just having a process for it. What is your process if someone doesn't pay by the due date? And have that documented and follow it. So I think that's the biggest areas that people just, don't follow, they let it slide. And so, when you let it slide, that means you don't have money in to be able to pay your bills. But secondly, letting it slide too for the actual business owner that owes you money is also bad, because the further they get away from that due date, the harder it gets for them to pay. So actually doing them a favour by following up as well. And so some of the things you can do is make sure you've got, whatever your process is, document it. So it might be a reminder the day before is also good. If you've got an invoice due, remind the client the day before, text message, email, and then perhaps a letter a couple of days or a week after the due date if they haven't paid, follow it up by a phone call if they still haven't paid. So whatever it is that your process, have it documented.
Fantastic. And perhaps I guess where some people might come unstuck with that is they're running their own business, they're even a sole trader, they're doing everything themselves. The last thing they can think of is having to call people to pay up for invoices. What are some options where people might have a second person or even third-party companies that can help with this process, or even software that can help with that process?
Yeah, so you can actually outsource it to someone else. I actually like that idea of getting someone else to do the follow-up,
Hmm.
because if you're a business owner, you've got that relationship with your customers, it can often be very difficult to have that conversation with someone.
Yeah.
And so you can actually, there's places out there that will actually follow up via debtors for you. They'll charge a percentage fee. There's some law firms that will actually do that. And then the other thing is you can just outsource as an admin role. Once you've got the procedure actually written, it really is something that's quite procedural and easy to follow. You can actually get someone outsource to someone else to be able to do that role for you.
All right, so someone within the team or even a partner in a relationship with the business.
Yep.
Simple couple of step, 5, 10 step process for what happens to chase up payments, send out invoices, that type of thing, and then the standardized email to send out in different scenarios. So maybe 2 or 3 of those, and you're done.
Correct. Yep, spot on.
All right, so not a big deal. Sin number 3, not having cash to pay bills.
Yes. So this is the big one where things like, GST, or if you've got staff super payments, because they're due quarterly, it's really easy to, not have the money put aside when that quarter comes around.
Mm-hmm.
And so it's hard then, and I've seen it with a lot of small businesses, it's hard then to ever play that catch up. So so often what I do with clients is try and pay their bills like that monthly. Or in some cases, bills even weekly. If their cash flow allows for that, and they can do that, that is the preference, because you don't get that big bill at the end of the quarter and then not have the money to be able to pay for it.
Yep. I'd say a lot of people get stuck with that one, especially when they're not used to running a business at scale. Is the money that comes in isn't all yours. You've got that 10% GST that a lot of people forget about. They see the money in the bank, they think, great, I've got that much, I can draw a wage or whatever I need to do. And then yes, the GST bill, the PAYG bill comes around and oops, I don't actually have it.
Yeah, so that's the other thing you can do is have a separate bank account. If you're really disciplined, have a separate bank account and put 30, 40, whatever percent away into that bank account, and that can help fund those things, and don't touch it. Just, you can have it in a high interest bank account, but just don't touch it. So that's another way, if you're disciplined, is to get around it as well. And your accountant can actually, a good accountant can work with you to figure out how much do you need to put away into that bank account, or to pay monthly if you want to pay it directly for the bills as well.
All right. So even just from the GST, a good place to start, open up a second bank account. Every invoice that comes in, take 10% of it, put it across into the GST account, and at least you're starting to build the buffer and get that discipline going of having some money set aside for those important bills that we don't want the ATO chasing us.
Correct. And once you get behind, it's too hard to catch back up.
Absolutely. Alrighty. On the subject of the ATO, sin number 4, paying too much in tax.
Yeah. And so no one wants to pay more tax than what they have to.
Definitely.
And so often what I find when businesses start out, they might start out as a sole trader.
Mm-hmm.
But as they expand and as they grow, that tax structure may not be the appropriate tax structure for them anymore. Mm-hmm. So they really need to be working with a good accountant to explore the other options that are out there, such as a company structure, a trust structure, because those sort of structures can be more flexible, which means you can end up paying less tax. As an added advantage too, they also have some greater asset protection as well, especially in the trust structure. So from an asset protection point of view and the chance of you getting sued, it can also be a great structure as well. So that combined with the tax advantages, it's always worth exploring. Am I still in the best structure?
Okay, so find a good financial planner, find an accountant, and do it early, and stop delaying, thinking that it's going to cost you money when in fact they're going to be worth their weight in savings as well.
Correct, savings and also asset protection. And it's not that expensive to set up a company or a trust. You're talking about less than $1,000. and you get someone to do it right. And so, yeah, always, and most people just start with a sole trader, it's just in their own name. Then all of a sudden they're making all this money and they've got a tax problem. So it's definitely worth revisiting very regularly with your accountant, at least every 6 months, 12 months, to have the discussion, am I still in the right structure?
Fantastic. All right, sin number 5, mixing business with pleasure.
Yeah.
Elaborate on this one for me so people don't get the wrong idea.
Yeah. So this is where you use your business for all your personal stuff. It's a bit of like a personal slush fund. And so that's really dangerous mixing business and personal for a couple of reasons. Firstly, it's hard to know if your business is actually profitable. Secondly, it's really time consuming and messy for the bookkeeper if all the personal and business stuff is messed in together. And thirdly, if you ever were going to sell your business down the track, you actually having those personal expenses in there is really it does not make your business look profitable. So you want to actually not have your personal expenses in there if you ever want to sell it as well.
Okay, so what are some tips that people can do to start separating those two?
Okay, so a couple of things is always have separate business and personal bank accounts and credit cards. So have the business one set up and the personal one set up. So that's the very first thing. And then the second thing is, sorry, I've lost it. I think that's it. Sorry, Simon. Yeah, I think just having the personal and business bank accounts separate is a very good starting point.
Yep.
Being conscious of the expenses that you're actually putting through. I think the one thing that I always do is if I was a shareholder and I was looking externally, would I let this, expense through? And so I think if you try and, step away from the business and think of it that way, then that's another good way to know, is this something that I should be putting through the business?
And that can be another benefit of setting yourself up as a company, provided that's the right structure for you, is that you literally have the thought of, well, this is business, and then I take money out and I pay for my personal stuff there.
Correct, yeah.
Okay, great. All right, sin number 6, not looking at your numbers.
Yeah.
This is something that everybody comes unstuck on because they either have no idea where they're up to or they just don't want to look at what they know is going to be there.
Correct. And I always say looking at your numbers is a bit like trying to lose weight. It's stepping on the scales. Right. When you step on the scales, that's how you know if all your hard work, your eating right, your gym exercises has been paying off. And so sometimes that can be really confronting. And it's the same thing with looking at and understanding what your profit and loss is. And so, it's something that you should do at least on a monthly basis. And the reason that you need to do it on a monthly basis is that if something's not working, you'll know within that month, and you can still make adjustments and change. As an example, if you spent some money on advertising and you weren't seeing that new client revenue coming in, well, you could adjust it. What most businesses do, though, the large majority, is they wait till the end of the year and then look at it. You can't change anything then. A whole year of wasted advertising has gone past, as an example. And so that's why on a monthly basis, it's really good to understand your profit and loss, to look at it, because that way you still have time to be able to make changes if something's not working.
Okay. And again, this is another one of those things where if the business owner is doing everything themselves, this is just another thing that's going on the list of, I don't have time for this. So it really comes around to starting to support yourself, put your A team around you, your financial planner, your accountant, a bookkeeper. And these are all people that are going to be worth their weight in gold to free the business owner up to give them the information they need without them having to do all the laborious administrative type stuff to do it. They can get out there, start generating more money, be on the job, be with customers, but still get this important information on a regular basis because professionals are providing it and doing what needs to be done. Correct?
Yeah, correct. I am a massive fan of bookkeeping. So I have a commerce degree, accounting degree. I could do it. I just don't want to spend my time doing it.
Yep.
And so because that month, that quarter comes around really quickly. So with tools and stuff now like Xero and with bookkeeping resources, it's just so easy for someone else to do it. And then you've got the data, it's live. You can get Xero if you don't need the invoicing for $10 a month. That links to your bank accounts, it can produce your profit and loss. And so there really is no excuses. And again, treat it like a client appointment. Have it set in there. No one makes appointments at that time. Spend an hour reviewing your profit and loss. So not only will it help you look at, it also makes you conscious of your expenses as well. So, you think about those subscriptions. Is that really worth it? When you're looking at every month and you're seeing that, subscription hit you in the face, it makes you, think about, what you're spending your money on as well.
Definitely. And I mean, even just that, we love Zero here at ninjodo as well. The ability for a business owner to just plug their bank account straight into their accounting software, and then the software to literally prompt, is this the transaction that you need to approve? And to be able to run down a page and go, okay, 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 instead of spending hours trying to double enter everything that's already there in the bank account. It's just that final step that needed to be made in the software world.
Correct. Yeah.
All right. Sin number 7, looking at profit in isolation. Elaborate on this for us.
Yeah, so this is probably a little bit tricky to get your head around if you're not from an accounting background. But basically, if you operate on an accruals basis for accounting, it means your profit is based on when you invoice. So just because you invoice, we know it doesn't mean you've actually got the money.
Mm-hmm.
So you could be invoicing, but not. You could have it showing high profit, but not necessarily have cash in the bank.
Right.
And so that's one of the things, if you are looking at your profit and loss, is to be careful, because profit doesn't necessarily mean that you've got money in the bank. And there could be a couple of reasons that you don't have money in the bank. So it could be that you've got too much stock. Could be that you've got problem with debtors. Or it could be that you're paying down some debts as well.
Mm-hmm.
So I think that's the key, is to just not to look at profit into isolation, to also look at it with cash as well.
And I think the flip side of that is also, don't just look at your sales, because that doesn't also help you.
No, that's exactly right. Sales is not money in the banks. Likewise, for the same reason, because it could be, they haven't paid you yet. They could be owing you money. It could be tied up in stock as well. So yeah, sales or invoices does not necessarily mean you've got cash in the bank.
Right. Okay. And then you've also got the cost of those sales. So trade, parts, supplies, all of that's got to go into actually getting the money. Still, that profit component within each one needs to be thought of as available for use in the business, not necessarily to withdraw from the business.
Correct. I always say that cash is king and profit is queen. So you need to look at both of them.
Nice. King and queen together.
Yeah.
All right. Sin number 8, not understanding your break even. So tell us what a break even is, and then why do people forget this?
Yeah, so break even is what you need to make before you make any profit. So in another way, it's basically when your total revenue or your total sales equal your total cost.
Right.
So your cost could be fixed costs like rent, or it could be variable costs like actually buying the product.
Mm-hmm.
So I could probably take you through an actual example that makes it, easier to understand. So
Sure.
It's like if you had an ice cream shop. So if you got an ice cream shop, this is just made up figures, obviously. Your rent might be $18,000 for the year. You might have to pay some wages of $20,000, and for each ice cream, you sell each ice cream, just to make it simple, for $5, and each ice cream costs you $1. So that's the scenario there. And in that case, your actual fixed costs are $38,000. Now your gross profit margin, which is the profit that you're making, is you're making $4 because it's costing $1, so it's $4. So that's 80%. Your gross profit is 80%. So therefore, your break even is 47,500. So 47,500 is, or to put it another way, you need to sell 9,500 ice creams. So a year to be able to break even. So on a weekly basis, that's $150 a week to break even.
Okay.
150 ice creams a week to break even.
Gotcha. All right. So starting with, you sell an ice cream for $5. It costs you $1, which means you get $4 left over.
Yep.
And then we take all of the costs that we've got in the business, and then we divide that by what's left over, the $4, and that'll tell us how much we need to sell for the year, and then we can divide that by 52 weeks to give us a weekly number.
Yeah, and so it's something for your target. You know that you need to sell at least 152 ice creams a week just to cover the cost. That's no profit, just to cover your expenses.
Okay. And would people be including the wage that they need to take in that cost?
You should. So we had 20,000 in there, but if you were working in the business, you should put that in as a wage as well. Otherwise, it's not a real indication on a real business. So yeah, if you're actually spending hours yourself in the business, you should be factoring that in as a cost as well.
Okay, so everything that costs to run the business plus your wages, that's your total cost, and
Yep.
then we'll work back from there.
Yes.
All right, I think we'll put that breakdown and a little
Yeah.
working example in the article below the video here, so that our viewers can work through at home and figure out roughly where they're at if they don't know.
Cool. That'd be good. Yeah.
All right. So sin number 9, we just touched on this, taking a wage and people
Yeah.
not doing it.
Yeah.
You're in business to make money, you're trying to provide for your family, and yet people still aren't taking a wage for themselves. So go into this one for a bit.
Yeah, I mean, taking a regular wage from a business is really crucial because if you're not taking commercial wage, it's not really a business.
Hmm.
So you should be able to, the work that you're doing, you should be able to step out of the business and pay someone else in the business to run. Now, I'm not going to say, especially in small business, it's really hard straight away to be able to do that.
Yeah.
So I know that from myself. So straight away, it's really hard in that first year, first 6 months to have a regular wage, but you can build to it. So I think that's the thing. You think that you have to start at this big, big commercial figure, but it doesn't have to be. Start small and gradually build is another way as well. And eventually you will get up to that commercial wage.
All right. And so when the cash flow is really lumpy, we've got to be paying bills. Where can somebody start? I mean, you say start small and work up. Give us an idea. Give us a working example.
So I would say start with, okay, if I was an employee somewhere else, what would I be paid?
Yep.
And so start with that as your base, and then say, okay, well, at the moment, cash flow. I always like to have a bit of a buffer in, my business bank account as well. So start with it, get a bit of a buffer, and so you can have those smooth out that cash flow. So if you've got an overdraft or you've got some savings, have a buffer, and then just start to pay yourself something small to start with. Review it every quarter and build on it. So look at what your commercial wage is, and maybe say, okay, well, from a cash flow perspective, we can't afford that just yet. Maybe start with half of the commercial wage.
Mm-hmm.
Make sure you've got a buffer in your bank account to start with, though. You've built up 20,000 or whatever is a good number for your business. So you've got a bit of a buffer. So if you do have lumpy, cash flow, you've got a bit of a buffer to be able to smooth it out. So sometimes that 20,000 might go down to 10, and sometimes it might be up to 30. But you've got a bit of a buffer while you're taking that regular wage. And that's the other thing. Make it regular. Do it like you would all the other staff. Have it set up on a direct debit. Something that you don't need to think about.
Okay, and so that really helps people start to get into a rhythm of their own personal income, but also the business outgoings, to get sort of separate from money comes in, I can take it, money doesn't come in, I can't take it.
Exactly. Yeah. Definitely don't just be drawing randomly. Have a set weekly, fortnightly amount, just like you would for another staff member.
Okay, and so because they're going to be using a bookkeeper now and an accountant and a financial planner, they're going to know whether something's happening with the revenue that's going to jeopardize taking that payment out. Whereas
Correct.
before, they might have just kept taking it and then realized, I don't have any money to pay the tax bill because I've been taking a wage. But this time, they'll be aware of things early so they can take evasive action or productive steps
Yeah, yeah.
in getting ready for that.
Correct. So because they'll have either tax account set up, or they'll be paying tax on a monthly basis, or they're super on a monthly basis, or that going to a separate account, and they've got a bit of a buffer built up in their bank account, that'll allow to smooth out that cash flow. So those things together and having a good team around you makes it really hard not to be able to have that, at least a regular small wage to start with.
Okay, fantastic. So, I mean, so far we've only gotten through 9 of the 10, but we've shown people how to develop their A-team, how to get everything sorted from a financial perspective so they can make good decisions and start taking a wage and not get hit by the tax department. So, pretty good gold stuff here in 1 to 9. Let's finish it off strong with number 10. Act like a big business. Why do people need to do it, and why can't they do it typically?
Yeah, so even when you're small, I always say act like a big business. The reason to do that is if you act like a big business and have those policies and procedures in place that a big business would, when you do grow, when you do expand, it's so much easier to be able to expand. When you've got those foundations in place, then it gives you the capacity to be able to grow and expand. So some of the policies I'm talking about are, an invoicing system, having a debtor policy, having a dividend policy, an accounting system in place. All that stuff from day one, you should start to do. So as you grow, as we expand, it becomes easy.
Okay, and so people who are already running their business, they're just seeing this now. They're thinking, okay, I've now got all these other things I need to do. Where should I start? What's the very first thing I should do to start acting like a big business?
So definitely having a good accounting program.
Yep.
So, having, doing stuff in Excel and things like that with the pricing of accounting programs now is just, not worth it. So, have a very good accounting program, even if you're, in a very startup phase. That is the most important thing. And so having that also can enable you to have an invoicing system as well. So something like Xero can enable you to invoice direct from there and can reconcile really easy. So those two together, I think, are very, day one starting things. And then from there, build things like your debtor policy. So, stuff like, are you going to ring them up a week after they haven't paid? Are you going to follow up them with a letter? So that then has a logical flow as the next stage. And then once you're paying yourself, a regular wage, not only do you want a regular wage, you want to be able to have, some dividend and some profit on top of that. So look at, having a dividend policy. What is your policy going to be with dividends? Are you going to distribute every quarter? Are you going to retain it in the business? And so that's probably something that comes later, once you're sort of giving yourself that commercial wage and that's steady and happening all the time. Then you can start to work on things like what is your dividend policy.
Okay, fantastic. So there you have it, people. The 10 deadly sins to small business cash flow management. Now, Adele, one final thing. What can we give people? What's your pro tip for small business owners?
My pro tip is to just to read as much as you can around and educate yourself around small business. There's not a small business school you can take yourself off to, so you have to surround yourself with an A team of people, but also just read as much as you can. So a book I read recently, which I've absolutely loved, is the 4-Hour Work Week. So for anyone that's a little bit entrepreneurial, that likes to think outside the box, fantastic. So it makes you think that, as a small business owner, you don't have to do everything yourself. So you don't have to be, superwoman or superman and do everything yourself. And that book really has, highlighted, and reinforced a lot of things for me. So fantastic book for anyone in business, the 4-Hour Work Week.
That's an absolutely excellent book. I'm still at the tail end of it now, finding nuggets of gold on every single page. And even if you don't already have a business, but you're thinking about starting a business, this is a fantastic tool to get before starting that journey, because it gives you a lot of ideas of how you can get started without falling into the traps that most business owners do.
Yes.
Awesome. All right. Now, we always offer this at the end of our interviews. And that's something where you're able to give back to our viewers some of your time, some of your specialities. So, do you have an offer for our viewers?
I do. Just for the ninjodo viewers, for any fans of ninjodo, I have an offer of a membership to my financial knowledge center.
Wow.
So I'll just give you some backgrounds around that first. Is that I believe strongly in financial education. I don't think there was enough of it taught at schools or university. And so for me, especially as you're a business owner, financial literacy and financial education is extremely important. So I've developed the Financial Knowledge Center, which has heaps of resources on there. There's quizzes, there's videos, there's articles about all things financial. So that's valued at $197, and I'm offering that to the ninjodo fans for them to keep their financial education going.
That's fantastic, Adele. Adele, we really appreciate your time. We hope to get you back on the show as well.
Yeah, okay.
All right, we're going to have to finish it up there. Everybody, I'm Simon from Ninjodo. This is Adele from Firefly Wealth. We'll speak to you next time.
Okay, cheers.
Bye.